Hello everyone, hello friends. Today we will discuss one of the most underrated topics in trading, when you shouldn't open deals. Most traders lose their deposit not because of a bad strategy, but because they enter the market at times when the probability of error is higher than the chance of profit. Friends, I want to remind you that in my Telegram channel you will find free signals and fresh trading ideas. The link to it is in the description. Subscribe and follow, because progressing in a community is always easier. And we continue. Let's look at real examples and analyze which situations are better to skip. Let's go. First situation, the market is getting chaotic when candles lose structure. Movement becomes illogical. Predicting the outcome is almost impossible. Recently holding a trading session in my closed Telegram channel. I had that exact market. I'll even attach screenshots of this horror somewhere here. As you can see, at much moments it is better to just observe rather than risk deposit. I certainly figured it out from the entry point and really pulled out the trade. On this day we closed the trading session in a good plus, and that's why I want to make out this theme in the video, so you can also not drain the deposit in complex transactions. So now I will do my best to find such a situation and show you in this video how it happens when the market storms. Let's say for this currency pair, look, we had a clear upward trend. Before this is our lows max constantly increased, and there it was so-called corrections. Correction was just the same to some levels of local, and from these levels there was a constant reaction. That is, logic is preserved as much as possible. Everything is clear and logical. In the same movement which we went here, the movement for me is as illogical as possible, because we don't know from which level exactly on the left the price will get a reaction. But at the same time it is dangerous to enter this non-descending movement, because we never know where the correction will go. More preciously, we assume that it can go to some mirror level, and from the level get a reaction. In this case, this kickbox as much where not the price just rolls down and you can safely just get on it. Such a moment, the fact that you have going here is the descending movement. You come in somewhere here and you have a price just in the air starts to unfold. Go higher, and accordingly through such a protracted correction, price continues move down. Respectively, look for such more amplitude movements when the price moves well and up and down. Now let's look at examples of correct inputs. Not to be unfounded, I will open a couple of deals. All the rules of strategy, we will look for a clear trend confirmed. We will look for a clear trend confirmation of minimum or maximum update. Enter only after correction. This will let us take the move more likely success on this currency pair. Now there is no point in looking for an entry point, respectively looking for another, and here we have just the first entry point. Let's explain why is this exactly where I work in a promotion. First of all, I saw a tilted level of support here. We see that the price has received a reaction from him more than once. Respectively, we open a deal for promotion. Also, we have our lows and highs constantly updated. What does the uptrend say? We also have a mirror level. We see that the price has stopped in this place. Here we had a red candle and here a red candle, after which there was a punching, and it's called as such mirror level. Also, if we left look, it's essentially possible to continue, and we form one level of support. Like I said before this, we follow absolutely all the rules. We went from support level. This is the first we have been updating our highs and lows. That is, each was higher than the previous one, and we had some correction here. That is, we could not come in here yet, but after this, how did the price just lower to this support level? Respectively, we have already gone further in the sequel. That is, by clear rules, went into a deal and pick up. This is a sure plus. Second situation, perfect patterns on the graph, they look beautiful, but in practice often turn out to be traps. If everything looks too obvious, it's a reason to be worried. Let's figure out this example. level. People who trade just using patterns, in this place they went down. Why we're going into downgoing deal? Because the take cover has formed. We had 3 candles green up and 1 red big one down. Observes them. Respectively, they go into the continuation of this movement. But what I see more accurately, a little bit you need to move the schedule away and see what we have going on. First, we provide this level of support, which was giving a very good reaction, both in the first case and in the second. There is, and this is our third touch. Third level touch often gives off reaction. Secondly, we have a certain side kick, and clearly from level 0.5 of this flat. We have momentum here. And when we have momentum comes from 0.5 fluid, either side kick, then more likely price can give reaction, same in reverse. Appropriately using these rules I did here, went in, let's say for promotion, and people who trade patternized would go down. Well, and accordingly would give money to the market. Let's now on another currency pair we will analyze the situation, and I will try to explain it as much as possible. Here we have a good situation. You can see, I'm sure that a lot of people would walk in on promotion now. Yes, because they see a general upward movement. See some level of support here. Let me show it. Can highlights here, but in any case they see what from this level it gives a reaction. But what do I see? I see the fact that I have a non-descending channel and we have not yet reached the level of tilted support, and plus everything we had here. Support level which punched and now adjusting to it, and the best thing it's going for a downgrade. That is a mirror level very often give a reaction. Respectively, we will not work out this level of support, which is educated here. We will work out mirror level since momentum even goes downhill. We look how perfect it works out everything. Always guys, turn your logic. No need to trade patternized. Always comprehensive analyze first. Many could also think what here we have a false takeaway of this level. Yes, there is such a strategy. Again, this is a patternized such strategy. When the price cannot fix for some minimum, in this case it is hit by a shadow, went below this minimum, but fixed higher. Respectively, for some, this is a reason for a reversal. Here, let's say, as an example, so highlight here. Here you see our price could not gain a foothold for this maximum, and accordingly gave a correction down, but the movement continued upstairs. Also here, a lot of people saw the level of support, so then that they were able to gain a foothold here and went on promotion. But unfortunately, they would catch a minus, and I use my technical analysis skills. Candle analysis, of course, yes. I went into a downgrade deal. Great guys, take another plus. Let's move on the third situation. Your strategy might stop working if the market goes sharply from trend to flat or vice a reversal. Important moment. This is to notice and not continue trading under the old conditions. Pay attention, guys. Now I'm coming in a promotion deal. Although many would have gone down here in the form of like ours, there is a navy move going on, that is the price goes from level to level. I noticed that now it's more likely movement will be directed upwards, and this will be just the same change of our trend. That is from the side movement from the fluid to the upward movement. I see the fact that before that we have a price constantly walked from the level. That is a certain zona. Yes, now I see that we have this takeover going up. A further absorption down and momentum up again. That is, if before that we have many time shadows from the both top and bottom, then now I see sure candles up. What they tell me about which is more likely we will go to the breakdown of this resistance level. I would even here open a double deal actually. So $200 in mind, we need to be ready, and we can try 2 minutes until the completion of this. So let's see how is this level already held on the reverse side, and we have drawn a new takeover. It's okay if this deal goes into the red. I want to catch up a little lower and with more a good entry point. Let me see, so far does not give a kickback. Yes, as the levels is already starting to be held on the reverse side. So perfect. From the level of support took a double deal and waiting for the end of these deals. As you can see guys, quite a little bit was not enough for the first my deal to be a plus, but as I told you, I've already put the double deal and just we need to wait for the end of this deal. I was not in the best place in prison the first deal, then here is just the perfect entrance, and as you can see, my deal is going to be a plus without any problem. Resistance level is already held on the reverse side and became the level of support. This is how important it is to correctly and in time identify a trend change. Everything perfect. We're taking the plus without any problem. Looking at those situations which we sorted out today, you are starting to understand, guys. So my friends, today we analyze the situation when it's better not to open deals and showed examples of correct entries. The main thing that is worth remembering is that sometimes the best deal is the one that you didn't enter into. The ability to wait and discipline is the key to preserving a deposit and achieving a stable result. If you like this video, give it a like and subscribe to the channel so as not to miss new videos. Goodbye guys, see you later.